everybody. Welcome back to Retail Edge, where we tried to give retail an edge. It's a Seahawks Monday after that big Super Bowl win and big Bad Bunny performance. Easy for me to say. Tom, do you have any Bad Bunny thoughts?
Yeah, I was rooting for the production team after I learned all of the bushes in his thing were actually people. Like seeing all the clips of them running off the field was awesome. So shout out
all
Bad
the
Bunny's
bushes were
production
people.
team.
Yeah, all the bushes were people. This is a family show, Tom. But like, I kept thinking to myself, do they have to stay, still that whole time? Like, can they dance? Are they getting paid a little bit of like hazard pay if one of the dancers runs into them? I don't know, but those are just where my mind goes.
I saw them shaking around a little. There was a little movement there. So
speaking of shaking around a little, how about these markets? Dow 50K, Dow 50,000, huge milestone. What are your takeaways? Because it is a big round number. Obviously, the White House is going to like it, but it's less about how or less about what happened and more about how it happened, right?
Yeah, all the senior citizen homes are very happy that their index of choice is hitting new all-time highs. But like you said, it's not about technology. So the Dow is a price-weighted index, not market cap-weighted. So stocks like Caterpillar, Goldman Sachs, Amgen, Honeywell, Sherwin-Williams, Home Depot, like these are real-world economy stocks and companies are pushing the index to new highs, whereas
actual
Salesforce...
things.
Exactly. And the losers, Salesforce, Microsoft, United Health, Amazon, these are all the bigger winners from last year and the previous. So we're seeing this rotation, and I think the Dow is a really good example of kind of the breadth of this stock market right now.
Yeah, I mean, if you look at the Mag 7, you would assume that the market is in the basement, not Dow 50,000. The names that you mentioned, Salesforce, Amazon, Microsoft, they're all year-to-date losers. On the other hand, you're right, Goldman Sachs, Sherwin-Williams, Caterpillar, Payton Tractors, those things are cool again. I will consider buying a fedora and a pipe. You'll have to tune in to the next Retail Edge. But let's hit the ticker tape now. 6 stocks, 1 minute. Tom, keep us honest.
All right, so this is most active by message volume last week. We had Bitcoin, sharp decline last week, down to 60K. We had MicroStrategy in the news. It's underwater on its Bitcoin purchases. So big traction there among traders. Then we had Supermicro, had a blowout second quarter report, basically doubled its full year 2026 revenue forecast from 22 billion to 40 billion, citing the AI demand. Then we had silver. Obviously, silver's been in the headlines. The big news last week, it made fresh lows and then rebound sharply on Friday and is continuing into this week. So people are looking at that as an opportunity to get long again. Then we've got Palantir, another big earnings beat and strong outlook, but it actually fell to 7-month lows on the news. So got caught up in some of that software sell-off that we'll talk about later. Then we've got strategy, again, with Bitcoin falling. A lot of, as Bitcoiners would call it, FUD about the margin calls and how the company's going to collapse. But Michael Saylor actually came out and said that the capital structure would allow the company to buy the dip in Bitcoin as low as 8,000. So we're at 70K now. 8,000 is a long way away, but we'll see. And then lastly is Nvidia, obviously with Amazon announcing $200 billion in CapEx for 2026. It's catching a bid. The big 4 technology stocks are spending $650 billion this year in CapEx, and Nvidia and its peers are going to be big beneficiaries of that spend.
No, at the end of the week, we were talking about how the last thing that investors, it seems, wants is any number to follow the words CapEx during an earnings call. Maybe the only guy who actually likes seeing those price tags is Jensen Huang, right?
Yeah. So all the semiconductor stocks were rallying on that, but the rest of the market was falling.
All right, let's move on now to the follower surge on the StockTwits community. There's lots of new people who are requesting information about kind of an old school, speaking of, Dow 50,000 and like an old school company. This company has been around for a while. What can you tell us about why people are looking for info about Kelly Services?
Yeah, Kelly Services, not really one that would pop up on anyone's radar. Generally, it's a microcap staffing company that was founded in 1946. So not a heavy hitter by any means, but last week there was a private equity company that came in and bought $106 million worth of its Class B shares, which gave it 92% control over the voting. So essentially they control the company at this point. So management is trying to figure out what the impact is. They're trying to update their guidance, figure out, they've got a poison pill in place right now to prevent any major changes from happening or some of the smaller shareholders from being wiped out. But it seems like this private equity group is coming in, going to take control of this company, and they've got some ideas for how to squeeze some value out of it. So speaking of squeezes, the stock went from $14 to $125 overnight on this news, but now it's trading back at $21. So a lot of volatility here. I think, the fair value is probably in between 14 and 125, and the market's trying to figure out exactly where that fair value might lie.
Yeah, it's a pretty big delta, but we'll get more information on Thursday, February 12th. That's where they will report Q4 earnings. Let's move on now to message volume breakout. So this is a ticker symbol where, let's say, last week nobody was talking about it. This week, lots of chatter.
Yeah, this week we've got a microcap preclinical stage biotech company. It's called Lamantis Pharma, and it's in the news, but not for the reason that many would hope. Not any updates on its drugs. Instead, it is pivoting into a digital asset treasury model.
That's a hard pivot.
Exactly. It's planning to buy $500 million worth of BNB, so the Binance coin. And that is essentially how it's trying to garner some interest in the stock. The company only has 3 to 5 full-time employees. It has very low cash. And so people are seeing this as kind of a gimmick to get the stock price up so that they can issue more debt or equity and kind of increase their balance sheet so that they can buy themselves more time to figure out the drug side of things. So a little bit of a wonky situation, but people are talking about it. They're trying to figure out, can this management team pull off a GameStop-esque turnaround where they, use, retail's interest to kind of shore up the company and go from there? We'll have to see. But for now, people are definitely debating it heavily on StockTwits.
Yeah, I'm a little bit of a pharma baby because my mom worked in the pharmaceutical industry for so long, and R&D does cost a lot of money. And if you do have $500 million in crypto, that'll help, right? That'll be a lifeline for R&D. On the other hand, if you have more Bitcoin than full-time employees,
yeah, maybe a bit of a red flag.
Yeah. The classic, we do biotech. Also, we have Bitcoin pivot that we all know and love in biotech.
No, but it's not Bitcoin. It's Binance coin. Very different.
Binance coin. Sorry, Binance. Thank you for the correction on that one.
You can tell by my laugh that it's actually not that different, but it is what it is.
Well,
we'll see how it goes.
Let's stay in this space with meme of the week. Bitmine Immersion.
Yep. Yeah. So Tom Lee, I'm also a Tom, so I commiserate with him. He turned into a bit of a, I don't want to say laughing stock last week, but he was definitely getting clowned on a bit. His company that he's the chairman of, Bitmine Immersion, is sitting on $8 billion in losses, unrealized losses in their Ethereum holdings. So again, for people not familiar, this company is essentially another digital asset treasury. Their whole thing is, hey, we're going to buy Ethereum, we're going to stake it, we're going to do other things to create value, but the main, value proposition of the company is that they hold Ethereum. So obviously with prices falling rapidly last week with Bitcoin, Ethereum hit, I think, 1.7K. At that point, his losses had swelled to 8 billion, and everyone was out calling for the demise of this stock and the overall bull case for Ethereum.
Yeah, I mean, there are lots of Tom Lee memes kind of being flying around the interwebs as of late. I like seeing him on, my screen because he's such an optimist. He's the ultimate optimist. But I almost feel like if a ship is sinking, the last person you want to ask for help is Tom Lee. You know what I'm saying? He'll be no, just wait it out. It's no, Tom, the ship is literally sinking.
So, yeah, I mean, certainly the bears are saying that. They call him a permabull, whether it be about Ethereum or stocks in general. But to his credit, he sticks to, his thesis. He has conviction. last week he was out talking about how every 50% decline that's come in Ethereum has recovered in a V shape, so a very quick recovery, and it's always made new highs. And so that's what he is calling for, a quick recovery. And he's also reminding people that with their staked Ethereum, they're generating $200 million a year in yield that they can reinvest back into to more Ethereum in the form of a dividend, essentially. So he's basically saying, hey, if you want to play this Ethereum and crypto bull market, this is a good way to do it. You're paid to wait, and it's a bit of a leveraged play that, if it works out, should pay off quite handsomely. So we shall see.
Yeah, you're right. I mean, he's got a thesis. He is sticking to it. I think Jonathan Morgan and StockTwits will have even more to say about this Ethereum situation. All right, let's go under the radar now. SM Energy, they closed a nearly $13 billion merger, right, with Civitas?
Yeah, another under the radar name for sure. It's a $5 billion US-based oil and gas company. They recently popped up on people's radars because they completed a $13 billion merger with, again, Civitas Resources. What this did for them is it tripled their production from 200,000 barrels per day to roughly 550K, so almost triple. Because of their balance sheet and what they acquired, their credit rating was upgraded by S&P Global, and it's saying that in the acquisition, it has some non-core assets that it can sell off to pay down some of the debt it acquired as part of that deal. So that's the bull case. They're saying there's massive synergies, providing additional scale on the revenue side, and then cutting costs by merging the companies. It has a 3.8% dividend yield, and it still has a relatively cheap valuation versus its peers. So if you're bullish on the oil and gas space more broadly, this is a name that people are looking at as kind of an under the radar play.
All right, moving on. Pros versus Joes, and we've got a huge name for retail this week. It is PayPal. We know y'all have been clamoring for more PayPal content, and you know what I always say, Tom, give the people what they want. Recently, they had some big news, got rid of their last CEO, Alex Chris. The stock back, if you bought PayPal when it IPO'd in the modern era, I guess in 2015, you would be about even. You wouldn't have made any money in the last 10, 11 years. I just jumped into the PayPal stream. One of the first comments, quote, "It's just a matter of making a few changes, which the new CEO is committed to, and company growth doubles. The stock price is at the lowest of all times. Buying with both hands," from Smart Trade 99. I'm guessing that's not your burner, Tom, but what are we seeing here with PayPal? Why is retail all over it, and what are you seeing here?
Last week, during its earnings report, it had some pretty poor numbers from a branded checkout perspective. That's its high margin business that slowed to 1% growth in the fourth quarter.
Yeah,
so
that's
this was
problem.
kind of a kitchen sink type quarter where they're like, listen, our current management is not working. We're going to get this person out. They're going to bring in Enrique Lore. I believe I'm saying that right. But
Enrique Lore,
yeah, he's from HP. So the bears are saying, hey, you're bringing in somebody with no FinTech experience, no payments experience to turn around this company. Like, what's the deal? Whereas retail is saying, hey, maybe there's a spin-off potential here. The HP had a split with its business. He's got experience there. Maybe they spin off Venmo or Braintree or some other component that creates two businesses that operate better, separated, and that can unlock a ton of value. So really valuation and this new management change, along with the stock falling another 20% on the news, has got retail saying, how much worse could it get? I'm basically buying at IPO prices. And if they make a couple of these changes, there should be a lot of upside.
Yeah, we talked to Shai Balor about this on StockTwits TV last week. This is right after the CEO change, and he doesn't think that it's a dead company. At least he felt like it was essentially just a misrun utility. PayPal made some or did not make moves when they were first movers in this entire industry. Instead, they've given it away to the Zells and the Apple Pays of the world, but retail seems to identify Venmo as hugely as having huge potential in terms of spinoffs. Maybe we see a big buyback here. I don't know. Would you be a buyer at these levels, like Smart Trade 99?
I'm more
Like, is
of a
this the kind of
technical
stock that attracts you?
I'm more of a technical trader, so I'm not really looking at this from an interest perspective on my end. But I do think, the valuation, the strong buyback, like its core business does generate a lot of cash. So at some valuation, it makes sense. I certainly wouldn't be shorting it here. I think if you've ridden it the entire way from 2015 to now, like it's been a wild ride, and now you have to figure out like, is your capital better suited elsewhere? So I don't know. I would say I'm more bullish than bearish because I think the risk reward has certainly changed with it falling 80, 90% from its highs, whatever it's down, but not necessarily a stock for my portfolio.
All right. Speaking of things that are down, software, hashtag IGV, that's the software ETF.
Yeah.
Man, what a ride. And it's been, I'm not even going to say it's a roller coaster. It's just been a slide down, down 33% for that ITF in 3 months. We've been talking about this, software slump. Some people think it's been overdone. Other people think it is. SaaS is dead because of everything that we're seeing in Anthropic and AI and everything they can do with cloud computing. Cloud.
Yes. Similar to PayPal, you've got very few people in the middle. It's either you love it or you hate it. And right now, the consensus view, like you said, is that Claude, all of these AI models are going to make software stocks obsolete, 5-10 years from now or even sooner. And so Dan Ives, from Wedbush was out last week saying essentially that the market is pricing in a doomsday scenario for software stocks. And
but
he's taking the other
Salesforce
side.
to his ITF. Yeah, you're right.
He's taking the other side. He's saying that enterprise customers, they're not like everyday people where I can switch from Figma to Adobe to this. Like these are enterprise clients that care about data privacy, security. They can't use these kind of other tools that are just new and recently available because they've got huge businesses and huge data at risk. And so he's taking the other side. He's saying stocks are down 33%. From their highs in October. A lot of the individual components are down 40, 50, 60%. He's buying the dip. Like you said, he bought Salesforce in his ETF and a couple of the other names on that list as well. So we shall see. But there was also a MrBeast related angle to the Salesforce thing during the Super Bowl. Did you catch that?
Yeah, something with like a treasure hunt. Right?
Yeah, exactly. So partnering with a YouTuber, well, arguably the biggest YouTuber in the world,
yeah,
to put together this Beast Games like competition where it was a commercial with 30 seconds of clues, and he invited you at the end of it to try to win $1 million by solving this puzzle, and you can use Slackbot as your kind of personal guide or personal help to figure out this journey. And if you Slack MrBeast the answer to this riddle, you can win $1 million. So
I'm out.
I don't think anyone did it so far.
Yeah,
exactly. Me either. I'm definitely not going to crack the puzzle, but we'll see if the internet kind of fandom that MrBeast brings can kind of resurface some of the excitement about Salesforce.
Let's put a pin in the MrBeast thing because we're going to talk about that at the very end of the show. But first, there was somebody that tweeted over the weekend, like after watching all of these Super Bowl commercials, it feels like the U.S. economy, and I'm paraphrasing him, is essentially being held up by gambling, AI, and GLP-1s.
Yeah, it's true.
Right. And here is an angle on that. Well, I mean, I was going to say those are all things StockTwits audiences. I don't want to make any presumptions about GLP-1s, but there's certainly things that StockTwits audiences are interested in, and GLP-1s factors in pretty significantly with this next story. Contrarian call, HIMS and Hers. This has been a roller coaster for HIMS, correct?
Yeah, just in the last 4 days, yes, but even for the last couple months, this has been a wild ride. So for those not familiar, Hims and Hers is a telehealth company. They basically offer, generic versions of a lot of drugs. They started off with like hair loss supplements and like things for, ED, erectile dysfunction.
We get it.
Other stuff like that. So, things that you were trying to treat, maybe be discreet about, send it right to your house, get it without insurance, with insurance, whatever. That was the market they were playing in. And then once these GLP-1s started becoming a lot more popular, they were like, hey, we want to jump on this train too. So they have been working on a variety of different products around this. But last week, they launched an oral version of Wegovy, which is Novo Nordisk's GLP-1 drug.
Sure, blockbuster drug. Yep.
So they priced it at $49 a month, which is a 75% discount to what Novo Nordisk was charging. And so obviously HIMS skyrocketed on that and Novo Nordisk went down. That was on Thursday, February 5th. Then Friday, the FDA and the Department of Health and Human Services comes out and is like, hey, Department of Justice, could you investigate this? This doesn't seem like, on the up and up. And it also issued a stark warning to other companies. It did name Hims and Hers, but it said basically to all companies trying to do this, like, be on notice. We're coming after you and not letting you do this.
Yeah.
And then so we had the Super Bowl. There was a bunch of commercials, all that good stuff. And then today, Novo Nordisk officially sued Hims for patent infringement. So the company had to completely pull back, say, hey, we're going to enter this market on Thursday. By Monday, we're completely out. We're not able to do this. And by the way, now we're being sued and under investigation by the DOJ. So the stock has fallen 40% in the last 3 days. It's down 75% since October. And yet retail continues to buy the dip.
What does that mean?
Well, in terms of the overall bull case remaining for the stock, they say that there's still a strong core business of those other drugs and treatments that we mentioned. It's growing at 20% year over year, has no debt, and almost $2 billion in cash. So it's got a strong balance sheet. It's growing its other products. Essentially, like, even if they don't have the GLP-1 business, they're in a pretty good spot. With that being said, on the risk side, the bears are saying, well, if they don't have the GLP-1 growth, then they don't deserve a premium valuation to some of its competitors. So that plus the management team needing to adjust its guidance and kind of reset expectations is going to be key. So we'll see how they handle that. But it's definitely a battleground stock, and retail as a whole is looking at this as an opportunity. But the bears will say they're just bag holders and need to, look elsewhere for better growth potential.
Yeah, dropping 40% in the last 3 days. And you're right, people are buying the dip, but the first couple comments in the stream, and there's a poop emoji there, and then good to short now. So,
definitely a battleground stock.
A battleground, to be sure. Interesting battleground to watch here in FinTech. Let's call this the keep your eyes peeled list. Robinhood earnings Tuesday after the bell. Stock is down 50% since October. MrBeast company now is buying. Now here's the MrBeast angle that I was talking about earlier. MrBeast company is buying a teen banking app called Step, and it's trying MrBeast. A company, I think it's called Beast Enterprises, looking to expand into FinTech, into financial services. Isn't it crazy that Vlad Tenev and Robinhood, and quite frankly, maybe even SoFi, should be looking over their shoulder for MrBeast?
Yeah, I mean, it's certainly it's a huge market, and that's why we're seeing, himself and other influencers kind of get involved in this space. I think from Robinhood's perspective, especially with this acquisition, it's primarily like it's an on-ramp for people that are trying to build credit and build banking history. So Robinhood's probably looking at this as hey, this is the first step that somebody needs to take before they become a Robinhood customer in terms of banking or different credit services or investing. So right now, they're probably not all of that much concerned, but as with anything, if you get an influencer that can drive tens of millions, hundreds of millions of customers to an app, if they take enough share from, say, a Robinhood or a SoFi or Ally or any of these other banks, they will become a buyout target eventually. So I think that's probably the angle. He's got this huge audience that he can kind of push to any product he wants. And so financial services is a very high margin, lucrative business if you can do it right. So this seems like the logical next step, and it'll be interesting to see if Robinhood and Vlad mention it at all on their earnings call.
Last quick question about Robinhood. I mentioned that the earnings call is coming up right around the corner. We know that, and this is something that we talked with Shai about last week, that it feels like Robinhood is very dependent on crypto. How resilient do you think their business is in the face of a just massive bear market on the crypto side? And obviously we've seen the stock, as I mentioned, drop by about half since October. I mean, could prediction markets fix what's ailing them, or what?
I think that's what the market's going to be trying to figure out. Like, what is the overall transaction revenue mix at current state? If you had asked this question 4 years ago during the original kind of meme stock craze, Robinhood was all transaction based, which is why they quickly pivoted and were like, hey, we got to add memberships, we got to add banking services, we got to diversify. And so I think they're in a much stronger place today. And part of that is Robinhood Gold. They're making $5 a month from all of these people. Last quarter, they had 3.9 million members. Analysts are looking for that 4 million mark to be crossed this quarter. So yeah, I think they're still very much a transaction based business, but on that end, they've got prediction markets. They've got the international rollout into the EU and Asia Pacific. So even if the crypto market in the US is slowing and overall, equity trading is down, they're doing things to kind of find growth elsewhere. And so I think the market will be looking for a lot of clues into that and just some overall guidance from the team on how they're thinking about 2026 in a good or bad market.
Yeah, we'll be tuned in for that. Vlad, a friend of StockTwits. Tom, thanks so much for being here. I'm assuming you're going to go buy stock in some paint companies right now.
Yeah, I'm going to buy 50% Caterpillar, 50% PayPal, just for the folks in the audience.
Awesome. Thanks so much. We'll see you next week.
See you then.